Welcome to WealthWatch USA, your source for the latest financial updates and insights. Today, we're diving into the tech stock rally, the market's hitting all-time highs, and what it all means for your investments. Stay tuned. Let's start with the tech stocks that are leading the charge. Yesterday, the Nasdaq hit a record high, closing at 19,480. Apple shares jumped too, reaching their highest point this year. What's driving this rally? Strong consumer demand for tech and investor optimism about upcoming job reports.
Meanwhile, the S&P 500 continues its upward climb, gaining 0.05% to hit 6,049. However, the Dow Jones underperformed slightly, down 0.2%. Why the split? Analysts suggest investors are rotating into growth-focused sectors like tech while taking profits in other industries. Now, let's talk about what's ahead. Friday's jobs report is the next big thing on everyone's radar. The labor market has been a key factor for the Federal Reserve's interest rate decisions. Strong job numbers could signal further economic growth, but they might also lead to tighter monetary policies.
What does this mean for you? If you're invested in tech, keep an eye on volatility, especially as interest rates can impact high-growth companies.
And let's not forget about crypto. Bitcoin surged past $40,000 this week, marking its highest point in 18 months. Market sentiment is bullish, with institutional investors showing renewed interest. Could we be entering a new crypto boom? Let us know your thoughts in the comments. First up, inflation has ticked up slightly to 2.6% in October, compared to 2.4% the previous month. While this might sound alarming, experts are reassuring us that this increase aligns with expectations and reflects broader economic adjustments.
Interestingly, gas prices have dropped by 12.2%, which is great news for drivers. However, transportation costs, like airfare, have risen by 8.2%, adding pressure on travelers this holiday season. The Federal Reserve's recent interest rate cuts aim to address these fluctuations and stabilize the economy.
Household debt in the U.S. has reached a record high, with credit card debt exceeding $1.166 trillion. That's a staggering figure, but here's the silver lining. Income growth has outpaced debt increases. This means Americans are earning more, which helps balance the burden.
To put this into perspective, the debt-to-income ratio is now 82%, lower than the 86% recorded in 2019. However, rising delinquencies in credit card and auto loans highlight the importance of managing high-interest debts carefully.
If you're dealing with debt, consider prioritizing high-interest balances to secure your financial future. Market predictions for 2024. Looking ahead to 2024, economists are predicting a prolonged late-cycle economic expansion. With easing monetary policies, this could create opportunities for growth, particularly in tech and emerging markets. But it's not all smooth sailing. Surprises like inflation spikes or geopolitical risks could disrupt this expansion. The ongoing US-China trade tensions, for example, remain a wild card for global markets.
This development could signal changes in trade policies, with potential impacts on supply chains and inflation. We'll keep you updated as this story unfolds.
Major financial news. In other news, the $25 billion merger between Kroger and Albertsons has been blocked by a federal judge. This is a win for consumer advocates who feared monopolistic practices in the grocery industry. What's next for these companies? We'll be watching closely.
That's it for today's top financial stories. Don't forget to like, subscribe, and hit the notification bell to stay informed on crypto, markets, and economic trends.